Commentary for Monday, the 22nd of July 2019. I hope everybody had a fantastic weekend and welcome to a new week. Fair to say it is not the most exciting start to a week I've ever seen. Starting off the US day, which is already halfway through the global trading day, and looking at Bitcoin, it's barely had a $100 range. Which is rare, and if you're looking at FX, we've got some equally tight ranges on that side of the equation as well. If it carried on like that, it would have been the shortest commentary ever. Thankfully, it didn't quite stay so quiet, but certainly one of the quieter days I've seen in a while. On the crypto side, definitely not too much to add. We have one small move lower with Bitcoin slipping back towards 10,100 and Ether down to $214. More rumblings of India wanting to ban Bitcoin from their financial system appears to be the catalyst, but there really was no follow through from that, and that was about the extent of the price action. And as we end the day, BTC's drifted back up to around 10,250 and Ether's sitting around 216. So all fairly quiet and stable, which, given all the crazy moves we had last week and even over the weekend, just gone, maybe not the worst thing. On the FX side of things, not much I can do to make this sound too exciting either. Sterling was probably the biggest mover against the dollar, moved down to a low of 1.2456. As the race for a Prime Minister continues. The Chancellor of the Exchequer, Philip Hammond, said he would resign if Boris Johnson won the leadership battle. If you believe all the polls, etc. in the UK, it would appear that Boris Johnson would be quite a long way ahead in that race. And UK Foreign Office Minister Anna Duncan has actually already resigned in protest against a possible Boris Johnson victory. So it's clear there are deep divides remaining within the UK Conservative Party, and with a looming Brexit deadline on the horizon, none of this bodes particularly well for sterling. The rest of the FX market had a pretty lackluster session for the most part, just drifting sideways in directionless trading. Even gold and bonds refused to budge, although US equities did manage to eke out some gains, with the Dow Jones up 17 points. And then Nasdaq up 57 points, which is equivalent of about 0.7%. Just one thing of note, the day's range in euro against the US was 18 points. That is the third tightest trading range on a daily basis for euro dollar since its inception 20 years ago. Okay, 20 years. Yeah, not the most exciting of days, but hey, we get them. So looking at the technical front, well, quiet days are definitely not the best when it comes to looking at good technical pictures. So today I wanted to look at something I haven't looked at for a while. I want to look at the US equity indices, and specifically on here I have the S&P, which I have in orange, and the Russell 2000, which I have in green and red. For those of you not familiar with the Russell 2000, it's an index of 2,000 small cap companies. A lot of the top macro traders I've worked with over the years have always preferred to look at the Russell over, say, the S&P 500 or the Dow 30, as it focuses more on the heart and soul of the US economy, and is widely believed to give a better indication of overall economic health. And what you can see from here, what I want to draw your attention to, really sort of going back, I guess, to the beginning of June, is we're seeing a little bit of a divergence here. We're seeing, we've had the S&P essentially make a new high, a new all-time high. But in the meantime, the Russell struggled a little bit to make any further gains, and as you see here, has actually started to trend a little lower, even on a day today with the three major indices, the Dow, the S&P, and Nasdaq all closed higher. The Russell did actually close a little bit lower. So, just something to keep an eye on. It may be something that you don't look at a lot, or maybe you've never looked at all. But I think it's definitely worth keeping half an eye on, just to see how the Russell behaves, because as I said, it's something I know a lot of very good prop traders I've worked with over the years have focused on, as they truly believe it to be a better representation of the overall economy than some of the indexes with a smaller number of components. So worth just taking a look at. And that's about it. I can't make this day any more exciting than it was. So I'm going to wrap up quickly. Wish you all the very best of luck for the rest of the week, and I look forward to speaking with you tomorrow.